Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time, and this week's topic, guys, is trade your plan and trust the odds. I'm going to go over everything that you are effing up in your trading, everything that you're messing up, why you're a break-even trader, why you're a slightly losing trader, why you're a slightly winning trader. I'm going to go over it in this lecture, so you better stick around for this one. And I'm going to use personal experiences, both good and bad, of why you are where you are and how to fix it. All right, so if you like the lectures, please click that like button, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is trade your plan and trust the odds. Look, when you are a new trader, you're still developing yourself. You're still developing your skills, so you may not have a plan that actually has odds, right? I know that sounds crazy, but your first draft or second draft of your trading plan may not be the best, and you may struggle with that trading plan because you don't really know what you're doing yet. But as you progress and your trading plan gets more refined, you should have a trading plan that on paper makes money, but you tend to fiddle with it a little bit or break your rules even slightly. And I tell people this all the time, but it's kind of, in a way, I hate comparing it to gambling, but it's like blackjack. The odds in blackjack when you're a card counter are not very big, right? They're very, very slim. Even the odds for the casino, slim. Trading is not much different in terms of your odds are very small in terms of your edge. I didn't mean odds, your edge. Your edge is very small. And if you mess with that edge, then you're going to mess with your expectancy, and things are not probably going to go as well as they could go for you. So we're going to talk a little bit about that today. And the reason we're going to talk about it is because there are statistical anomalies in everything you do. You know, you hear the term reversion to the mean, right? See, people don't have a problem when they have 10 up days in a row, right? They're like, oh, sweet, I'm just great. But when you have 5 down days in a row, you're like, well, it can't be me. It's got to be I'm just unlucky. Well, maybe it is you. Maybe it wasn't you when you were up 10 days in a row. Maybe part of that was luck, right? So the point I'm getting at, and we're going to go through that today, is you need to find out the truth. And as simple as that sounds, objectivity is a hard thing to come by in life. And I use this analogy frequently, and I use it because I think it applies to a lot of people. But go ask. Just for fun, seriously, I mean this. Do it for me. You don't have to come back and answer me. Just do it. Go take 10 random people that you know, aunts, uncles, brothers, sisters, spouse, whoever, and ask them if they're a good driver. Ask them if they're a good driver. I would bet 75% or more would come back to you and say, yeah, I'm a good driver. I'm okay. I'm good, right? And yet when you go out on the road, what percentage of drivers do you think are actually good? For me, it's a single-digit number. When I'm out on the road and I'm driving and I'm thinking, oh my gosh, how are there not more accidents with the stupid shit people do? My point is they're not being objective, like you may not being objective with yourself with regard to your trading, okay? So that is a big part of success in life in general, but in trading specifically, is being able to stand up there and go, that was a dog shit trade that I just took, or that was a great trade, it just didn't work. Why is this important, you're asking? You're wondering, well, why is that so important? It's so important because if you know the truth, you don't have to go crazy over it. What I mean is, if you're lying to yourself, you might make an unnecessary change, a change that didn't need to be made because you lied to yourself, or vice versa. Maybe you're not making a change that needs to be made because you go, oh, that was just unlucky. Instead of saying that was a bad trade, you're going, I was just unlucky. Well, now you're going to take that same crappy trade again and think you're just unlucky again. So there's a lot to it, all right? But before we get into that, let's start with, when will the insanity stop? It'll never stop. We all know this, and that's okay. It's good, right? Because that's what makes the world go round, especially the market. So let's take a look. This week's is just, I just got a laugh out of it. Somebody sent me this and I laughed, so I had to bring it to you guys. Sell puts, I've lost $90,000. Looking for good stocks to sell puts. I've lost $90,000 doing dumb moves in the market over 3 years. Looking to turn around. Only have $7,000 to start with now. My day trading account on margin restriction till I get past $25K again. What reasonably low cost stocks are down with upside I can sell puts on? You're asking the general public. Red flag number one. I like to sell no more than 3 weeks out, but that may be a bad philosophy. That may be a bad philosophy, and you're asking the random internet people. Okay, 2 strikes. Here's the best part, though. That's why I outlined. I love this. Although I have a bad track record, I do have the ability to self-analyze possibilities. Love the response. I do have the ability to self-analyze is the least self-aware thing you could have said. And that's the part that made me laugh. I read it, I just started dying. I'm like, thank you for that comment. Stupid people do stupid shit. That's right, Martin. Stupid is, stupid does, sir. Forrest Gump even knew that, right? I need the IQ of like 70. Although I have a bad track record, I do have the ability to self-analyze possibilities. You are so self-analytical that you're asking random internet people about low-cost stocks that you can sell puts on. You don't see a problem with this? Love the response. It's the least self-aware thing you could have said. Objectivity and common sense are truly superpowers. And here's the worst part. Sorry. You all think you have it. Yep, I just hit the big old pink elephant square between the eyes. The pink elephant sitting in the corner. Every single person that is listening to me right now is thinking, I have common sense. I have objectivity. Tell me I'm wrong. Every single person right now listening to this is like, I'm a good driver. I have common sense. I have objectivity. It can't be true for everybody. It's an impossibility. It can't be true for everybody. And actions, as I frequently say, speak louder than words. Don't tell me what you think. Just show me what you do. All that matters. So I got a laugh out of that, so I thought I threw it in there. That's all. It's not like horribly egregious. I mean, they lost $90,000, which is pretty bad. But anyway, just doing as I'm told. There you go. There you go. There's the perfect victim mentality. I love it. All right. Understand what trading is the slide. Trading's a mindfuck. That's it. That's what it is. I can't think of a better 4 or 5 word sentence to describe what this business is. Okay, that's what it is. Don't let it get to you. That's it. Don't let it get to you. Okay? There are lots of ways to lose, but there are few ways to win. And this is something you really need to take to heart. There's a million ways we can lose money in this business. And obviously there are a lot of ways you can win also. But there are fewer ways to win than there are to lose. And I guess Ollie's thinking, well, statistically, Jared, that's not true. You might be right. The point I'm making is, when you find a way to win, don't mess with it. But what I'm also finding is people are messing with their trading all the time. They're fiddling with it. And it's okay if you have statistical analysis to go back and look and go, hey, this small adjustment could help me. But they're doing it out of subjectivity. Most people don't. Look, let's just call it what it is. Let's just be very honest and blunt today. Most people don't track their trades. Most people don't journal their trades. They think because they write down their P&L at the end of the day that they're tracking their trades. Right? They don't know what day of the week they're most profitable on. They don't know what pattern, buy setups, breakouts, 3-bar plays, climactics. They don't know what pattern they're most profitable. They don't know if they make more money on long trades versus short trades. They think they do. Oh, yeah, I'm really great at trading Microsoft, but your statistics don't show that. Oh, wait, you don't have them. So no, this isn't about tracking your trades. There's not a trade tracking spreadsheet in this lecture. It's not about that at all. It's about being honest with yourself. Being objective, about saying it's okay to say, I don't know, because I don't track it. And if you don't, you're you're not going to know what to fix. You're going to think you know what to fix, but you won't really know what to fix. It's like the parts changers. You ever go to like a car dealership and it's like, well, we think it's this, let's change that. We think it's it. You don't know though. You're guessing at this point. We don't want to guess as traders. We want to know. Okay? So trading is definitely a mind F. There's no question about it. You're going to go through some roller coasters, but you just cannot let it get to you. Your goal all of the time is finding truth. That is your number one job, is to find truth. Not lying to yourself. Use common sense and objectivity and find truth. Okay, so where am I going with all this? This is the last text slide you're going to see. I believe it is. Let me double check. Yep, that's the last text slide you're going to see. Everything else from here on out is charts. There's a few points I want to make. Okay? Starts off with, there are lots of ways to lose. That's the first topic we're going to talk about. Okay? All right. This is Shopify. Nice daily chart, right? Let's start with the daily over here on the right-hand side. We're gapping over a pretty good-sized red bar, right? That's a decent-sized red bar. We're gapping above that right to there, okay? And we have room to, I don't know, $84, whatever the pivot high is there. But it's a smooth pullback, so the move back up should be equally smooth, right? So big red bar, we're gapping over it, okay? Well, we have what looks to be or appears to be a 3-minute turnaround bar, all right? Well, 3-minute turnaround bar triggers right here, proceeds to go below the low of the day by, I think it was 7 or 8 cents, and then it just went higher for the rest of the day, like it should have done, right? So the ultimate result was there. It did what it was supposed to do. It's just how it happened, well, how it happened was a very expensive lesson, right? 3-minute turnaround bar, got in right there at the, see the green bar? It's hard to see, but the red bar high and the green bar high are different, right? The green bar goes higher than the red bar, and you buy a turnaround bar the second it breaks the high of the prior bar, okay? I actually gave it a pretty good stop loss down here. You know, it was a little bit under, I think it was like 80.45, but either way, okay? It stopped out, proceeded to go higher, and then it ended up at 83 and change, okay? It stopped out by 7 cents, then went higher all day, eventually hitting target. Now, you could 84% it or oh well, but that's not the point of the slide. The point of the slide was what? Let's go back. There are lots of ways to lose. This is one way. And you're like, well, what do you mean by that? Well, one way to lose in trading is to take a good trade that doesn't work. Right? That's one way to lose in trading. Take a decent trade, a good trade that just doesn't work. Okay? Let's check that one off. This is what I would consider a good way to lose, right? This is a good way to lose because you didn't do anything wrong. You followed your plan, you took a quality pattern, and it just didn't work. These you can live with. These aren't, you know, these aren't that terrible, but they happen, all right? So this is a good loss, okay? But it's a loss. That's all that matters, okay? Now, what about this? This was yesterday. This is multiple bottoming tails on Microsoft, showing relative strength to the market at the time. I should have put the Qs down at the bottom, but it was showing good relative strength. The entry was 408. I put my order at like 407.90, 407.95, something like that, okay? 5 or 10 cents early. And what happened? Pulls back and completely stops out. And I gave it the low of the day. It wasn't like I didn't give it much room. Gave it the low. This is what we call an anticipation stop, right? It's right out of professional trading strategies. This isn't a new concept, right? This is where you put your order a few pennies before the actual entry. And what happens? It triggers you, but the actual pattern above 408 never triggers and then stops you out. So this is now what? This is now the second way you can lose, all right? You can take a good trade and it just doesn't work. You can anticipate a trade and, well, it comes back and stops you out. And these don't happen often, maybe 2 to 3% of the time, but they happen, okay? They definitely happen, okay? And to prove to you that they do happen, this one's here, and we also have one, let's see, yep, I think that one's in there as well, all right? Oh my gosh, look at this one. Amazon. 3-minute, 5-bar play. I call it a 5-bar play instead of a breakout. Anticipation stop out. Like, what? That's one yesterday and one today. Why did I put this one in today? Why did I rush to squeeze this one in here? Remember we talked about statistical anomalies and reversion to the mean. So let's say you have 3% chance. 3% chance of an anticipation stop out. For me, historically, it's in that range. Sometimes it's as high as 5%, but it usually hovers in the 3% range, okay? What are the odds, Ollie, what are the odds of back-to-back anticipation stops? If it happens 3% of the time, what are the odds to get 2 anticipation stops in a row? The answer to that is small, slim, thin, low, okay? Not high, right? To have something that has a 3% likelihood and it happens 2 times in a row, it's small, but it does happen, as witnessed yesterday and today, right? Microsoft, anticipation stop yesterday. Amazon, anticipation stop. Now, is Amazon a terrible play? Not in my opinion, right? Amazon was strong off the open, but a little choppy. Strong, but choppy. Then you get this wide range, see it right here? This wide range green bar that comes in, okay? And you're looking at the market, and you go, wow, the Qs are pulling back. This is bar by bar. So the first bar of the day, the Qs are red. First bar of the day, Amazon's green, and big green, okay? Then you get a topping tail, bottoming tail, a doji bar, whatever, doji bar. So we get green bar, topping tail, and multiple dojis. But what's the market doing? Pretty much going lower during this time. And then as the market kind of goes a little bit sideways, tiny bit green, little bit sideways, Amazon shoots up to the high of the day. I called at 170.50. Do you see this bar right there? I don't know if you can see that. Blow it up. Amazon filled me at 179.49, which is exactly where I put my order. I put my order, I'm like, I'm not going to anticipate this by too much, right? I'm not going to anticipate this by too much. So I put it a penny early, which is not very much. And it went to 179.49 and then proceeded to stop me out. That's a statistical anomaly to have back-to-back anticipation stop outs. But it happens. And it did happen. All right? Now, we have learned you can take a good trade that doesn't work. We can learn you can take anticipation stops. We have learned statistical anomalies do happen. So we've learned 3 lessons so far. Good trades fail, anticipation stops happen, and statistical anomalies happen. Well, there's I'm sure there's more. But what's the one last thing that we haven't talked about? Well, bad trades, right? No one is immune to this. I took a horrendous trade on Nike last week. Horrendous. One of the worst trades I've taken in a long time. Well, I took one in January and one in February so far. All right. Well, the stock started off pretty weak, looked pretty solid. We were actually looking at shorting it right over here. And then it kind of moved up and we, took it off our list. But then I saw this engulfing bar and I thought, oh, interesting. And then I just had a momentary lapse of reason, brain fade, whatever you want to call it. And I thought, in my infinite wisdom, that it would be a great idea to short a stock 3 bars down on the 2-minute that had just moved about $1, maybe 75 cents. And this is not a big, huge moving stock. I thought, oh, geez, what a great idea, Jared. Why don't you take a stock that's down 3 bars and 75 cents and just short it? Well, you saw how that played out. It put in a little bottoming tail, went like 6 or 7 cents, popped, pulled back, popped, and then eventually stopped out. Okay? This is what a dumb trade looks like. Never take a trade down 3 to 5 bars on your entry time frame. I'd like to have this one back. It's right out of the textbook. Right, 3 bars, 4 bars, 5 bars. You guys know the slide. Think, really, really think. You know the slide. Well, this was an expensive lesson, wasn't it? So now we've learned 4 different things. We've learned that you can take a good trade that doesn't work. We've learned that you can have an anticipation stop loss. We've learned that statistical anomalies are real and do happen. And we've also learned that you can do stupid stuff and pay for it. Okay? Now, obviously the flip side is true too. You can take a bad trade and get lucky, but that's a hard way to make a living. Okay? It's also a hard way to make a living taking bad trades in general. So we've learned, as it goes all the way back to here, that there are lots of ways to lose. And I've just shown you 4 of them that I personally have done over the past month. Okay? It's real. Okay? It's very real. Now, let's flip to the other side. Let's move to the positive stuff. This is BA. Saying understand the expectation. This is a stock that put in a red bar the day before, and now today it's this little bar here. It's gapping under. I blew it up over here for you guys. Okay, I blew it up. So you can see it's kind of taking out this area and has room to drop down to the 200, which was, I don't know, $5 or $6 away. And what do you get off the open? You get a green bar that bullies, and then a turnaround bar. Okay, and then a little consolidation bar. So this is an example of what I would consider to be, and let's do this because it's always important to do this. At that moment in time, one of the prettiest patterns you're ever going to see in your life, right? At that moment in time, one of the most beautiful patterns that you can see, which is a super 3-bar play. A turnaround bar combined with a 3-bar play, and you're looking at a gap that looks solid, and you're like, oh, looks good. And you know what? Ultimately, it was good, right? This one gave you a couple opportunities. You could have anticipated here and it would have gotten a little dicey, okay? You could have shorted the sell setup at 220, or you could have just taken it when it broke the low. Well, for me, I took it when it broke the low. I believe that's where I took it, right? I'm pretty sure that's where I took it, right in there. Okay, so got in at 220.10. Stop loss, why? Because I'm tired of getting shaken out. Gave it all the room, like nearly a $2 stop loss, something like that. And the stock dropped, popped, and then just continued to trend lower. Now, I'll be honest, I expected a faster pullback than this, but the concept's still the same. It took longer than expected, but it got the job done. That's all that really matters. Okay, so this is taking a good trade that worked. Now remember, this is not immune to statistics either. I could have anticipated this and it could have stopped me out. I could have taken this trade and it could have stopped out, right? So when we looked at how bad things can happen, it could have happened to this trade just as easily as it happened to the other trades. But where am I going with that comment? What's the purpose? What's the point of the comment? The point of the comment is, wait for it, let's go back again. Trade your plan and trust the odds. That's the whole point. Trade your plan, take the trades that are in your plan, the way in which they're written in your plan, and then after that, throw your hands in the air and go, I'm trusting the odds. Then track all those trades, and then after 50, 100, 200, 300 trades, you'll have a better understanding of whether or not your trading plan is good, or whether or not you're getting lucky in some cases, getting unlucky in other cases. Right? Back-to-back anticipation stops, I chalk up as unlucky. But if 10 in a row happen, now I have to rethink things. Right? So let's do it again. BA, oddly enough, back-to-back BA trades match the time frames. What do we have here on the daily chart? Okay. Well, I blew it up again. Right here in the middle, I blew it up for you. We have a daily sell setup. It bounced back up into the 200 period moving average, fought a little bit, and then gapped under a green bar with room down to this line down here. Okay, that line down there is a $200 mark, and this is the 210 mark. So right there is 210, right there is 200. You have $10 of room right here to play with. What do you get? Oh my gosh, do they get any prettier than this? Wide bar, narrow bar, boom. This is like perfect trading. 5-minute, 4-bar play, perfect trading. But It doesn't guarantee it's going to work. But it goes back to trade your plan, trust the odds. If this pattern is in your plan and you have matched it with the daily or the 60-minute chart, higher time frame, that's your bias, and you've matched it with the lower time frame pattern, in this case a 5-minute 4-bar play, you take it and you let the odds take care of themselves. And there's the trade, right? Unfortunately, and why am I bringing this up and why is it in the lecture? Because this is part of trading. Be a 5-minute 3-bar play with a daily C. That's nice, Jared. I have no idea where that came from. With a daily gap, okay? Partial lot fill. WTF. Right? I got a partial lot on this thing. So I ended up making $500 on something I should have made like $3,000 or $2,500 on. Oh well, shit happens. Imagine if I didn't anticipate, I would have gotten nothing. Do you guys understand where I'm going with this? I hope you do. I hope you're seeing the bigger picture. I'm showing you all the ways you can get fucked. Sorry for the language. And yet, you can still make money in this business. Even though once in a while, you're going to get taken. It's just the way it's going to be. You're going to take a good trade, it's going to stop. You're going to take an anticipation stop. You're going to take a bad trade. You're going to have a statistical anomaly happen to you. You're going to get a partial lot fill. It's not a maybe or an if, it's a when. It's going to rain someday. Bring the umbrella every day. Understand that this is going to happen. This was a trade that you want to throw your mouse at the wall on. Because you're sitting there and you're like, I did everything I was supposed to do. And it gave me a fifth of the shares I was looking for. And it's a perfect pattern with a perfect daily chart. It's just perfection. They don't get much prettier. And then, why do I say this to you? Because this business is a mindfuck. Again, let me explain. Hey, I just took back-to-back anticipation stop-outs, which means I placed my order before the actual trigger, and it triggered me and stopped me out. So what do you do on the next trade? You don't anticipate. And then what happens? You get a partial fill or you get skipped. Oh, and then you're chasing your tail all over again. See where I'm going with this? There's a method to my madness and my thought process. You come in, you do the same damn thing every day. All right, I took back-to-back anticipation stops. Guess what? Tomorrow, I'm going to anticipate again. And the next day, I'm going to anticipate again. Because in the big picture, I have to deal with the 2 or 3 or 4% of the time. It happens. But the rest of the time, if I don't anticipate, I might not get filled. 30% of the time. That's why you have to do it. And this business will keep you on that chasing your tail. And if you start changing because of those things, oh, it gets even worse and worse. You go down a rabbit's hole and you don't want to be down. It's Pandora's box. And slippage is real too. Okay? Crazy, crazy, crazy. And it didn't even matter how good the pattern was if you didn't get filled. There's like a quote similar to that in what? Professional trading strategies. Doesn't matter how great a pattern is if you can't get the shares you need. It's right out of Professional Trading Strategies. It's amazing how much good shit's in that book. It's amazing. And it's real. But you still have to come in and do your job every day. And every once in a while, understand you'll come in, you'll do your job, and you won't get paid for it. Some days, you'll have to pay up for it. Some days, and this is the hardest part about trading, it's one thing to go to work and get paid. It's one thing to go to work and not get paid. It's another thing to go to work, do a great job, and then have to pay your boss and say, thank you for the opportunity to work for you. Because that's what trading is. Imagine going to your job and you worked your ass off all day, and then at the end of the day, you got to pay your boss for the opportunity. That's what trading is. And, just being real, most people can't handle it. Most people can't handle it. It is what it is. Pay your boss for the opportunity. Why? Because it's a big opportunity and you're not going to have to pay your boss that often for it. In the meantime, it's like shooting fish in a barrel, making money when you do it right. Anyway, next idea. UAL. Gaps up, okay, over a doji, a red bar doji, over a topping tail, and it has room back to over 44 right there, okay? I blew it up over here. I blew all the gaps up so you could see them easier. Okay, so you gap over the doji, gap over the topping tail, and you have some room up here. Well, what do we have? Wide bar, narrow bar, and two little bottoming tails, little shakeouts. I mean, it's pretty juicy, right? It's pretty juicy. 42.57, stop loss 42. Gave it room. Could have used a stop loss of like 42.25. Gave it room. Tired of getting shaken out. Oh, wait. Got shaken out by 7 cents on that one trade I gave extra room to. You see where I'm going with this? Even though I'm giving them extra room, every once in a while the room gets taken. Okay? So, you see that. But it pays. It paid out. It went to like 43.10. I needed 42.91 to hit target. That's good trading. There's nothing wrong with this trade. Now, I'll be honest, it didn't really do as well as I thought it was going to do. This stock, I think it peaked at like 43.10 or 43.20, something like that, and then it actually pulled back later on in the day. Yeah, exactly. See, you remember Moises. You were in it. It went like 1R or something like that. Now, and here's the rub. Now, guys, hear me out for a second. Trading's a mindfuck. Like, Jared, please, the language. Well, here is a trade. Hold on. Let's go back. Let's go back. I gave it the room. And it took the room and then worked. Damn, right? I thought I was giving it enough room. It took it by a dime and then worked. Wait. Now let's do the opposite. Let's give it the room, $42. But for you, Moises, for 2R, guess what? If you had not given it the room, $42.25, you hit your 2R target. And now you're sitting there and your mind is about to freaking explode. You're about to go postal. You're like, wait a second here. One fucking stock, I give it all the room. It takes the room and then it works without me. The next stock, I give it all the goddamn room. It goes 1R and comes all the way back down and stops me out later on. Do you see where you're chasing your tail again? You're like, one trade, if I don't give it room, I make 2R. And it just works. The other trade, I give it all the room and it stops me. Now you're just questioning everything you do. It goes back to trade your plan, trust the odds. Trade your plan, trust the odds. You're not ever talking about 1 or 2 or 3 or 4 trades. You're talking about 100 or 200 or 400 trades. Anything can happen over a short span, a short run. But the longer you do that, the more trades you incorporate into that, the more likely the odds start to smoothen out. Right? You're not going to get those crazy spikes like back-to-back anticipation stops that have like a less than a 1% chance of happening. That'll smooth out over 500 trades. One trade goes 2R on a tight stop, another trade stops out on a wide stop. That will smooth out over 500 trades. But over 10 trades or 5 trades, all bets are off. Anything's possible. It's amazing, isn't it, Jordan? It's incredible. It goes back to the how things happen matters, but it shouldn't. But it shouldn't, you know? Ali, you are 100% right. Variation is a process killer. You're 100% right. Stop the variance, stick with the process. Or stick with the process, stop the variance, however you want to look at it. Now, here's another one. Tesla, matching time frames. Here's the daily. We're breaking under this green line. That's the daily chart. You can see it down here. All right. Under the green line. And under that area, Tesla's going for a ride. And it did, and it left a bottoming tail, but it didn't matter. It dropped a ton beforehand. Cliff called this trade. Now, if I blew it up, you'll see it's kind of a super 3-bar play on the 1-minute chart, right? You have a green bar that looks like it's pushing higher, and the bears come in and go, oh, no. we're going to engulf this and take this out. Then we get a narrow range resting bar, and there's your entry, 183.35 by like 184.75. Tesla triggers, and then just, oh my goodness, I think it went like 6R, something like that. It went 5 or 6R. It was a lot. I got it. Guess what? I got a partial lot. It happened so fast. For me, I wasn't staring at it when it happened. I got a partial lot. I should have had double the shares. Oh well. It's a perfect pattern, perfect trade. The problem is I wasn't looking at it. It was someone else's idea, in this case, Cliff. So Cliff got a full lot because he was the one looking at it. I wasn't. By the time I figured everything out, I was like, oh, bam. I'm lucky I caught a half of the lot. And then this thing just tanked and went down in like 174, 175 range. Oh well. Then, hold on. Because guys, we could go down the rabbit's hole and be here all day. Then what happens? Tell me you've never done this. All right. I know my target's 1R. But I got a half lot, a partial fill. I'm just going to wait for 2R. So then I can at least get my 1R that I should have had. You ever done that before? Ever? Just where you're like, yeah, let's just shoot for a little bit more because I didn't get all the shares I really wanted. So I'm just going to shoot for a little more. And then, boom, it turns. In this case, that didn't happen. It didn't happen on Tesla. But boom, then it turns around, comes all the way back, and you're out for a loss or for break even. And you're like, you motherfucker. Why did you break your plan? Just take the half R gain. You got a half lot, 1R, it's a half R. Take it gain and walk away. But no, variation is a process killer. We varied the process randomly with no back testing, with no reason to do so other than you were pissed off that you got a half lot. You've never done it except for the dozens of times you've done it. Do you guys see where I'm going with this lecture? There are so many ways, very small, innocuous ways that you can completely F up your trading statistics and odds. Back-to-back anticipation stops. Oh my gosh, that's less than 1%. I'm not going to anticipate anymore. Get skipped on the next trade. I'll get a partial lot on the next trade. I'm going to shoot for 2R instead of 1R. It hits 1.4R, turns around and comes back against you. Oh, shit. All day long. All day long it happens. And people wonder why they chase their tail. And this is the reason so many traders feel like they're so close to making a lot of money. And they probably are, if they would just stop the variation. You're right, Ollie. It's a process killer. And we justify it. Well, you're killing yourself, right? And then, hypothetically, what if the anticipation stop trade was right before Tesla? You took a full loss on an anticipation stop, and then you get a partial lot fill on Tesla. Tell me you are not fuming, pissed off. You're like, are you freaking kidding me right now? I take an anticipation stop on the last trade, and then instead of getting all my money back and then some, I get a partial lot on the next trade, and it works? The market has it out for me. And that's what you start telling yourself. I mean, you start believing that. And then believing that leads to doing stupid shit. And then doing stupid shit leads to being a break-even trader forever. Or just quitting the business. I'm giving you the experience of this in a nutshell because it's all real. Every one of these trades you're looking at happened in the last month or less. And every one of them is real and happened to me. It's part of the business. It's part of the business. Deal with it. Get used to it happening. In fact, expect it to happen. Expect it to happen. It's like living, I don't know, it's a terrible analogy. It's like living in Arizona. It's the sunniest state in the country. I expect it to be sunny every time I do something. But every once in a while, we're going to get 3 days in a row of rain like this week. Not often, but it's going to happen. When it happens, do you cancel all your outdoor plans because it's never going to be sunny again? No, it's still the sunniest state in the country. The sun will shine again. And the analogy there is the sun will shine again on your trading. It's just you're going to have some rainy days. And every once in a while, it's not going to be a day. It could be a rainy week or a rainy month. It will happen. Not might happen. It will happen. How will you handle it is the only question. Will you tear up your trading plan and start changing everything? And then all of a sudden, you're starting over again. Or will you just look at it objectively and go, that was a good trade that didn't work. I'm going to take that trade again. Or that was a bad trade that didn't work. I shouldn't take that again. Or that was a bad trade that did work. I shouldn't take that again. Okay? Here's another trade on Roku. Beautiful little 1-minute breakdown. Got it done quickly the way we like them. Roku showing relative strength, relative weakness to the market. And last slide. Okay? Microsoft. Okay? Showing a little strength to the market, couple wide range bars, break resistance, consolidates out just over 406, and then breaks out and works. The point I'm getting at, guys, I think I've made clear enough times, is you can't help this part right here. See this? I'm going to highlight it. See that? You can't help that. There's nothing you can do about that. But you know what? You can do everything about this. Right? You can do everything about this. First part, nothing you can do about it. It's going to happen whether you like it or not. I don't care if you're the Einstein Michael Jordan of trading. That first part's going to happen from time to time. Second part, you have total control over. 100% control over. Focus on what you can control. Because what you can't control, you can't control. Okay? If you're going to lose the right way. Exactly right. If you're going to lose properly. You're going to lose. There's not an if. You're going to have some trades that don't work. Just shit happens. Even Ali takes losing trades once in a while. It's a compliment, Ali. Anyway, there are lots of ways to lose, few ways to win. Don't let it get to you. Trade your plan and trust the odds. Trade your plan and trust the odds. I understand it's not easy. That's why I showed you all. I literally just pulled my pants down for you today. I showed you the good, the bad, and the ugly. Right? The good trades that worked, the good trades that didn't work, the anticipation stops, that shitty ass trade I took on Nike. And I'm trying to tell you that, as they say, this too shall pass, as long as you stay consistent with your process. When you start fumbling with that without reason, look, I'm okay if you mess with your process because your statistics suggest you should. Right? If you have a tracking spreadsheet that has 500 trades in it, and it's like, hey, Jared, hey, Ollie, hey, Jordan, hey, whoever, that 3R is not working so well compared to whatever. Okay, fine. But don't just randomly do it because 4 trades in a row went 2.7R and didn't work. That's a bad reason to not do 3R. But people do it anyway. Back-to-back anticipation stops is a bad reason to not anticipate. Make sure the choices you're making are for good reason and you can back them up. All right? It's like getting into an argument with somebody and you know you're losing, so you just make a personal comment. Oh, you're an idiot. Well, that's not helping the situation. Don't just do something in trading because you feel a certain way. Do it because the statistics say you should do it. You're going to have some massive, immense frustrations during your journey as a trader. Some of the biggest frustrations you can possibly ever imagine, and some you can't imagine. And you're going to have some of the highest highs as well. But if you stay consistent, you'll have a lot more highs than lows, and it will change your entire life, the freedom, the flexibility, and everything else that goes with it. Anyway, I hope you guys learned a little bit about process. I hope you learned a little bit that trading can be a real challenging process at times, and that you need to focus on what you can control because you can't control certain things. Focus on what you can control. I hope it will help make you a better trader. I'm Jared Wesley of Live Traders. We'll get back at it again next week.